let's talk about the stock market, which I said earlier that our analysis was not great in here. I think I used the word we whiffed. Well, what I had looked for was this decline to go for a couple more days and then get a rebound. Well, it was stronger. It bottomed sooner. So you can see the note that we have in here to our subscribers that this cycle has moved back to 20 days. It was 22 days. It keeps moving back and forth, and it did catch us by surprise. Whereas we thought it would come down further in here, maybe get down to 31.50, and then move up and fail and move down again. Well, the pattern doesn't change. However, what did change is the magnitude of the advance, and that the momentum has now slipped back to positive. That changes things in that the intermediate patterns are still suggestive of a decline out here until late February, but it's likely to be more range bound in the range that's developing in here than it is to be the big decline down to that 31.50 area. So right now our projections here to the end of February, beginning of March, are to about 32.15 right over there on the downside. And the upside resistance is just really powerful right in here. It got really flew to the upside, but here you have around 33.52. This bottom of this is 33.63. So that's a really pretty powerful resistance. You've got this evening star forming here if you hold on to that. And it would, say to us that there's not a lot more upside. But still, you can see that we have this range that I think is developing, and the corrective period out over here looks to be in the last 2 weeks of February, where we get back into a period of risk. So we might, since we developed a better momentum picture here, we might only pull back a little bit here, try to get another rally out here, and then accelerate back to the downside over there. I talked in the beginning of the show about a scenario from 1987 and how extended we are right now. I'm going to bring a bigger picture about that down the road for our members, but I don't think this decline is it, to tell you the truth. I just think that this is the end of a intermediate correction that will bring you down over here with this minor correction or daily correction, and that we'll get another rally period out over there and then set the hook on the bulls for a much bigger decline into late summer. So this is just the beginning of this top development going on in this choppy period, and we'll call the next week basically a chop, come down, come back up. We're going to look for that area up 33.52 to 62 for it to stall and not give a whole lot of downside in here. Some of the evidence just said the market has strengthened, but it's at resistance and there is minimal upside left. I give it a 0.5% to 1% potential on the upside, with about 4% potential on the downside for the near term. That would be 4 to 1 or greater to the downside. Now I said that over here, and I gave it odds that it would be maybe 8 to 1 on the downside when it was in making the top in here, and the decline came. We were looking for as much as 175 points. It just didn't last as long. So people that are writing me are making comments that I was wrong about that. Well, I was wrong. I was especially wrong about the last week. But believe me, being wrong about a week or being wrong about a couple days off the low is not going to stop me. And I work hard to understand this every single day. So I encourage you to do the same thing. If this big rally caught you and you are wincing from that, well, just learn the lesson, whatever it may be, and start looking forward, because that's the way that you make progress. Forward looking is the way we want to be, and that's the way we're going to be here as we do our analysis. And that's what I just brought you. Choppy time coming up, I think, here, and range bound somewhere between that mid 33s and low 3200s in here for probably the next several weeks.